Is it not time to pause, sir, and figure out what's really going wrong and spend a deep dive and making it so that this decline in comp store numbers does not continue? Because it is perilous to the actual existential existence of Starbucks.
Hi Team Value, JJ here. Welcome back. Well, Starbucks share price has been crashing down since earnings and really declining before that quite a lot. What's going on here? We'll look at Q2 earnings, a bit of a disaster, and an interview with Jim Cramer and the CEO, which was kind of explosive. Jim asked some really hard questions, so we'll take a look at that. Let's get into it. Okay, let's have a look at the Starbucks share price, what's been happening, and it's down 15.88% just in the last trading day. The past year, it's down 34.8%, and over the past 5 years, it's actually down 3.65%, so it hasn't been having a good run. But of course, if we pull back to maximum, we can see that it's up 22,000% over the lifetime, going way back to 1992, so it's had a good run. But look at those big ups and downs there. 2019 it dropped off a cliff, and 2021 it dropped off a cliff again, and more recently in April 2023 it started dropping off another cliff. Is this a sign of a coming recession? That's the question. Starbucks does tend to be hit by recessions like this. It's a consumer product, people buying drinks, which is possible to cut back on. Back in the global financial crisis, we can see 2006, sort of the peak of that sort of housing bubble in the US, and it went down hugely during that period, and then bottoming out, and this the stock market bottomed in March 2009 there. It does tend to be quite volatile based on economic conditions, so it makes me wonder if something in the US is coming in particular. Obviously in China we've seen this, both China and the US. If there's a recession in the US and China at the same time, China's macro conditions are tough, and the coffee scene is quite competitive in China as well. Luckin Coffee is a name that's been in the news in recent years for the fraud, but they actually have regenerated. If you look at that company, I looked at it recently, they are back on track, so to speak, and they are a competitor to Starbucks in China in terms of how many places they're opening, how many stores they're opening. Huge number, but it is a different price point there. Nevertheless, a competitor, and they are growing there. Okay, let's have a quick look at the investor deck that they provided. Here's the global net revenue figure, 8.6 billion, which is down. And here's the comps for global, North America, and international, all down there. And non-GAAP global operating margin, 12.8, they're down. So a lot of figures are down here. Global store count, 38,000, which is up, declining in the financials, but still growing store count. Is that a questionable strategy that they're still doing there given the financials? Innovation in terms of products here, they highlight Lavender platform, one of the most successful product launches, and Luckin Coffee in China has also been pretty good on innovation. If you look at their company, they have things based on bubble tea, coffee based on bubble tea, Chinese products. So they do have quite a number of products that they've been putting out, competing against Starbucks and going pretty well. It's worth having a look at them too. US Digital, 38.8 million 90-day active members. Record mobile order and pay, 31% of transactions. That's not surprising that digital payments, mobile ordering is picking up. Again, I think that would be a pretty strong thing in China as well. Now, the all-important guidance here, comp growth, global low single-digit decline to flat, US low single-digit decline to flat, China single-digit decline. So investors do not like to see that. Analysts will not like to see that. And new store growth about 6%, US about 4%, and China 12%, so growing strongly in China, the store count anyway, not necessarily the financials. Global revenue, low single digits, operating margin flat, capital expenditures about 3 billion, full year EPS GAAP flat to low single digits, non-GAAP flat to low single digits, so pretty lackluster there, declines. Analysts and investors won't like to be seeing that. Okay, let's have a look at some of this interview with Jim Cramer and the Starbucks CEO. Now, I criticize Jim Cramer sometimes for being a bit of a clown and entertaining, and that is part of his job, being entertaining, but he really does ask some hard questions of the CEO here, so let's have a look.
John, when we look at the biggest loser today, it's going to be Starbucks. It's among the worst performers in the S&P 500. It's down double digits. Company posting quarterly results that I would say would be substantially below street consensus and cutting its full-year guidance, one of the bigger guidance cuts I've seen in a long time. Joining us now exclusively is Starbucks CEO Laxman Narasimhan. Mr. Narasimhan, it's good to have you on the show, and I appreciate that you're coming on, despite the fact that the quarter was extremely weak.
Jim, it was a very tough quarter. Thank you for having me. There were three reasons for this. First, we saw unexpected pressures on our occasional customers, more intense than we expected, that impacted their visitation. Second, the choppiness of the recovery in China continued with a more intense price war than what we expected.
Yes, that price war in China, it's pretty intense competition there.
And third, challenges of our business in the Middle East that impacted us not just in the Middle East, but also in other geographies.
Okay.
Clearly,
I understand. Now, what I'm trying to figure out, sir, is why did you not feel the need to pre-announce this shortfall, given the fact in the previous quarter, your CFO said that she felt that you could have a earnings per share growth in the range of 15 to 20%. This is a substantial decline from that. And given the fact that you said on the call that April did not end well, I'd like to know why you did not feel the need to come out and say our quarter is going to be substantially worse than expected at least 4 weeks ago.
It's fair enough that some companies often do that, pre-announce if it's not going to be great, rather than surprising the market, which they've done here, and it's sent the share price way down. If they pre-announce it early, if they know it's going to be bad, sort of preparing the market for that, and they didn't do that. So this is a fair enough question.
I think, Jim, we've been working on action plans to address these headwinds. And so what we wanted to come back with was not just the announcement, but also the action plans that we have in place, which, by the way, are not business as usual. And I'm happy to talk about them.
Well, let's finish, because I know that investors are trying to figure out why they should hold on to the stock. Some of the things that I am confused about.
There would be short-term investors, presumably, because long-term investors would have been in it for a while or want to be in it for a long time. Traders might just drop it immediately and seeing something like this. But, in terms of thinking about buying it on the price drop, that's a different story. If it drops so much, we've seen how much it went down. It's down quite a lot over not just this quarter.
I checked with all the major, both public and private companies that are in a similar business to you, and no one saw a 3% decline in comp stores because of weather, and none of them saw a negative number except for you. Is it possible that your coffee is just too darn expensive?
Oh, that's a good question too. Should they be lowering prices down? Let's face it, Starbucks coffees are expensive. Excuse me, just pausing to have a sip of coffee made with my AeroPress coffee maker, which I highly recommend. I do own shares in the company with a controlling interest in AeroPress, which is Tiny Limited. I've made videos about Tiny before, but I wouldn't recommend anything that I don't truly love the product, and this makes fantastic coffee. I'm going to leave a link in the description to the Amazon store if you want to check that out. Don't take my word for it. There are so many great recommendations of the product. Just read through them, and it's not expensive for what it is. It's the question of whether the economies are declining, which we know that China is, and this recession that's possible for the US still possibly coming. Everybody's looking for that. Is this a sign of that, and that Starbucks coffee is just too expensive?
Jim, I think that if I look at the US occasional customer, they have clearly cut back on visits to us. If you look at the value for money scores we have, they're still strong, but there's no question that the occasional customer is cutting back on visits to us.
Another thing, if I could just say, is that there are a huge choice of caffeine drinks now, a massive choice. We've seen the explosion of caffeine drinks, not just coffee, but other caffeine drinks, and for younger people as well. I wonder if this has got something to do with it. Is it, part of a longer decline?
We have not been able to communicate to them the value that we provide. So what we are doing about it, is it's not business as usual, but there's an action plan we have in place in order to do that, to reach them and to communicate the value that we are providing. What we're doing for that is we are making it attractive for them to come back into the Starbucks app and join it. On the app, what you will see is you will see value that they haven't seen because they've not been part of that environment. There are drops that are going to happen every Monday. There are bundles that we're putting in place that are attractive for them. For example, a beverage and a drink at a certain price. And so what you're seeing there is the effort we're making in order to ensure that our occasional customers get to see the value that we provide. Our loyal
Why
customers
did the loyalty program go from 34.3 to 32.8 in linked quarter? I mean, those people are not occasional. Those people are hardcore. Why did your membership, and I know your membership was up 6% year over year. I'm not concerned with that. I'm concerned with linked quarter. Why you had not the occasional, but the hardcore drop off.
Is it to do with the economy? I mean, Cramer said there that other competitors haven't had that drop off. There are companies like Dutch Bros, which is very popular. Is there just increasing competition in the US? Starbucks was early on to the coffee scene. You know, other countries had good coffee. I'm from Australia and New Zealand, which is famous for its flat white coffee. And in Australia, I lived in Sydney for quite a long time. The Italian immigrant population, so very good coffee there has been for a long time. So Starbucks didn't do so well in these places, you know, but is there increasing competition in the US now?
Jim, if you look at the most loyal customers, they actually continue to come in, they continue to buy us frequently, they continue to customize and upgrade. It's at the tail of the loyalty program, particularly those that are, you know, in the 90-day active, as we call it. The folks that didn't come back, they again are very similar to the occasional customers. We have an action plan in place right now to communicate directly with them with offers that have gone out even as recent as this week in order to ensure that we can reverse the visitation losses that we have seen with them and to bring them back. And yes, you're right. Overall program did grow by 6%.
Right, that's necessary. But what's more important, I think, is the linked quarter decline. Now, let me, before I turn it over to my colleagues, you said it's not business as usual, and I want to make a point here, sir. You are still expanding as if it is business as usual. You add, for instance, on the quarter, you talk about opening stores in Honduras and Ecuador. Is it not time to pause, sir, and figure out what's really going wrong and spend a deep dive and making it so that this decline in comp store numbers does not continue? Because it is perilous to the actual existential existence of Starbucks.
Another good hard question, because we saw that still expanding. You know, they were highlighting that in the results, that they're expanding and its growth, but do they need to do something else? Do they need to work out what's going on here in terms of the decline and stop expanding so much?
Jim, thank you for the question. What I would tell you is, if you look across the world, our system sales in Latin America expanded double digits. Our sales in Japan expanded double digits. Our business outside of Malaysia and Indonesia in Asia Pacific showed growth. If you look at the U.S. business and look at the fundamentals of the U.S. business, we are holding share in the U.S. We are still the largest player in out-of-home coffee. If you look at some of the metrics that we have...
Dunkin' Donuts, Tim Horton said you are not holding share, sir. I regard them as being seminal companies that are just as good when it comes to... McDonald's says you are losing share. I can't go against those three companies. They are too good and too honest and too big for me to dismiss.
So losing market share, is it not? The economic situation, is the competition intense? Now, if you're getting value out of this episode so far, really appreciate it. If you remember to hit that like button to help the algorithm to spread it to more people. Thanks.
We are the leading category player in coffee. I'm talking visitation share and what we have. If you look at our in-home coffee business, it grew share 140 basis points. But if you look at the business underpinning us, tea grew 8%. Cold grew 1%. So there are elements in here. If you look at our partner sentiment and what we have inside stores, attrition is down to its lowest levels. So there's work going in. The thing we didn't do enough of is really attack the occasional customer with delivering and communicating value to them in a more aggressive manner. That's what the plan we have does.
Luxman, it's David. China continues to be a not unimportant part of the growth plan for this company. You cite fierce competition there. a slower than expected recovery. But to Jim's question again, why not sort of focus on improving things there and or fighting off the competition? You still are opening many stores. I know the net number was still a pretty significant one for the quarter in China.
I know it's a kind of a land grab in China because, it's a new population of coffee drinkers there expanding. A company like Luckin Coffee has definitely lower prices. Perhaps it's difficult for them because they have to compete with other brands there. They kind of have to grow, I think.
David, first of all, I think if you look at the overall network of stores that we have, they're in very good health. If you look at the cash-on-cash returns that we get from the new stores and the expansion, they're 40% cash-on-cash returns. We see no reason to change that equation. It does not mean that we're not focused on fixing the challenges we have with the occasional customer and with the fact that they're not visiting us as often.
Luxman, I was noted your language in terms of citing a deteriorating economic outlook weighing on customer traffic. Do you really think that's the case? We talk about it endlessly here, as you well know, and it's far from clear that there really is a deteriorating economic outlook. So what is it you're seeing that perhaps many others are not?
So sort of blaming it on a decline here, economic decline, is definitely the case in China, but questionable about the US so far. There's sort of varied reports of a decline at all there so far in terms of spending.
I think what we are seeing is pressures on the wallet for some of our most occasional customers. And they are translating that into what they're choosing to do.
All right, what are they doing then?
Well, so some of them are obviously visiting less, as we have seen, hence our action plan, which is about communicating value, which is about ensuring our speed of service improves, so we capture the demand that we already have. And thirdly, that we bring in products that they find exciting. What we are doing with products is, if you look at the lavender matcha, really appealed to some of these customers. We are bringing in new products as our seasonal launches go that are really appealing to these occasional customers as well. So it's about price, it's about value. We're bringing those two together to ensure that the occasional customers find it worth their while to spend their money at a Starbucks.
What do you think? I'd love to know what you think in the comments. Do you think that Starbucks is a buy? This price is certainly going down. Could it go down more? Is this a problem? Is Starbucks in trouble? Is this a sustained decline that we're going to see? Is it because of these macroeconomic factors like they say? Some of the competition says no. What do you think? Is Starbucks a buy? I'm not a Starbucks shareholder, but let me know what you think of Starbucks. Are you a shareholder? Do you think that it's a buy now or a sell or just a hold? Let me know in the comments. Now I've got some exciting news about the Art of Value Patreon. If you're not aware, I've just created the Value Supporter tier, which is just $1.50 per month. And with that, you do get some bonus content regularly, less than the Value Angel tier, which is $5 a month at the moment. And being a kind supporter of the Art of Value is really what this tier is for, but you do get some exclusive content as well. And for the Value Angel tier, if you want to join that, you get exclusive videos. I go more in depth, things that I don't say anywhere else. My portfolio's on there. So I'll leave a link in the description if you want to check that out. Now I'll put some related episode links in the description if you want to see more. And if you're watching this on YouTube, I'm going to put a video here of what YouTube thinks that you in particular should watch next. So go and see any of those now if you want to. And thanks to everybody for watching or listening, whichever platform you're doing that on. And see you in the next one.